Good morning. Welcome to Tuesday, 30th of September, last day of the quarter, Ange.
Super exciting, super exciting. And the markets have been waiting for you because whilst you were away, everyone was watching, going, do we message Rich? You know, we had Elliot on. Elliot was like, tell him as he's in Oktoberfest that I think it's going to be a squeeze, not going to be a correction.
Well, that hasn't come right, has it?
No, not yet. Well, I
think it was a wonderful couple of days last week.
Fantastic. You look really well. How was it?
Yeah, really good. So we were in the Nodally tent in Munich, which is, really, it's where the aristocrats are.
Nice, of course.
Apparently.
Oh.
And it was very
No
visible.
less from you.
Didn't stop being someone being sick on the back of my shirt.
Is that why we had no pictures for our trader friends?
Oh, we'll get pictures.
I did ask.
No, I wasn't putting you in control of the pictures or producer Phil.
I asked Wardy as well. Come on, Wardy, get some pictures from Rich. He hasn't sent any yet.
Good morning, everybody. How are we doing? Who have we got on then? We got Carlo away from the numbers. Steve, Funky Gibbon.
Ooh, Dave the Rave.
Dave the Rave, we like that.
Yeah.
Jesse 14, how are you all this very fine morning? Sorry for the slight delay there. They've been messing around with wires again. So looks good though, doesn't it? Yeah. I'm not sure I've got any lighting in the background.
Have you? And it's been a very cold time whilst you've been away. But today it's brightened up in time for your arrival.
Well, yeah, I'm not sure. We decided to put up a picture of the morning there. Then we decided to put it coming up, and then we've taken it off.
Yeah.
So which one are we doing? Are we doing coming up? Let's do that then. Right, Ange, what have we got?
So we've got overnight action with myself and Rich McDonald doing the old school remix up until 8:15 when Chris Beecham comes back on with me on Fast Markets to talk about some of the biggest movers today. We've got so much to get through, not just in the gaming space, but also in the drug sector.
And then I've got Piersy in the house getting your tech update. Mr. Buckworth going to be coming. Has he got any new ideas or are we just caressing the old ones?
And we've got Michael Seen, who's going to come back with us on Expert Edge at 9:10. Boy, have we got a treat for you because we're going to talk about whether share buybacks are good or not. I know this is a key topic amongst our friends here, and how to invest or trade if you know that there's a share buyback incoming.
Right, good morning, Poppy. How are you, sir? We had an hour and a half meeting last night.
Oof.
Because we got the big quarterly review in the art of investing this week. So that will be hitting your screens on Friday, but we'll be going through every single position. Why have we got it? Are we going to keep it? Are we going to add to it? So that's going to be a real interesting Art of Investing podcast coming up on Friday.
Let's go straight to overnight action because a huge amount has happened and we'll get you through how to position for it. Welcome back to overnight action. Right.
Producer Phil asking if you can raise your chair, Ange.
I can't raise it.
I'm not sure if that's possible. She's already on stilts.
I am on stilts, and I think the table's grown since.
It has, yeah. They've put the table up.
It's grown since Rich was.
Are we going to do a wide shot? Show everybody why my screen's in shot. See, let's test them under pressure.
Under pressure.
No, they're just pressing any button. And I see I've got a full-on side-on shot as well now instead of
Did you also notice that they got rid of the giant table, the old table? Have you noticed it's gone?
Oh, gee, God, the studio is changing every single time. Take a couple of days off and I feel like I've walked into a different place.
They changed the lighting. What do you think of the lighting behind us?
Not as good.
Oh!
What do you think at home? Let's get that on the poll. Why is it dark behind me? It's dark when we wake up in the morning now. Maybe that's why.
Yeah.
That was very depressing.
It is, but I'm very excited because it's also coming up to Halloween, which is when I normally change or look at my positions for the Long Ong fund. So like you have said previously, you think about changing it up as to how many times you go to the dentist. So I have the same thing, but I use Halloween to remind me and Easter.
So quarter, yeah, your quarters.
Yeah.
Interesting. So does that mean you get dressed up in a costume to go through your portfolio?
If it's really bad, I have a really bad costume. If it's good, then I have pumpkin cake. Yeah.
You're going to be away on holiday then, aren't you?
I will actually, and I will be. Well, I can do it anywhere now. I can do it online.
Go on, tell everybody where the Ong tour is. This is a real.
We're flying into KL, and then we might go to Singapore because I've got lots of friends and family there. We might actually even go to Cambodia
Wow.
to see
I've
Angkor
never
Wat. I'm not quite sure yet. We're just playing around with ideas. Friends, if you have ideas for me as to where to head to take Mama Ong as well, please let me know, because I'm so busy looking at all the RNSs, and Rich and I are constantly talking about trade ideas that I rarely have time to even look at, just buy the ticket, hope for the best.
Well, you see what Wizz Air have done recently.
No, what?
So you spend £499 on a basic membership kind of thing, and it's like an all-you-can-eat.
Oh, nice.
It's an all-you-can-fly. All you've got to pay is the tax.
Yeah.
And you can only book 2 days before. So basically, whatever flight's not full, you can book it. So somebody has flown 160 times.
Does this person need to work?
£499. It's great.
Person need to work. They can just say, I'm going to call my boss, and in 2 days' time, I'm not going to come in. Sorry, I've got this Wizz Air flight,
Yeah.
Wow.
Good. Right. Away from the numbers, sorry to hear you are having some problems with that. I have to go through the same as well. So I've been putting off changing over my tasty from one to the other, but I think they say that it could take up to 10 days, but I think that the hope certainly is that it's a lot quicker than that.
Yeah.
So fingers crossed for you there, Neil. But let us know how it goes, and I'll wait till you get yours done until I do mine.
Actually, Neil, if you send us an email, ask@ig.com, I have asked Jolie to write out, the step-by-step who to call if you have issues.
Well, let's get Jolie on and talk about that, because I need to go through that one. That's
we can send it. Yeah.
Tricky. Good stuff. Right. Well, talking about tasty, we've got Nike numbers tonight, and I've got a little bit. I teased it out there yesterday, but I've got to put a little spread on and get that up later and show everybody. But I'm sold the 62 calls. Right, so what I'm saying there is, I don't think it goes down below 62. Even if they warn, I think you're talking about 62, 63. So I've taken premium from that, and I've invested in the upside. So I've bought a 70 call, so right at the money. So I go long at 70, and then ride that right up to $81. And this is in the next 10 days, I think the expiry is.
So I'm going to just draw Rich's
structure
for you. So the top was, remind me of the number again.
81 is where I sell my long, and I also go short there. So I'm saying I think they go up, but I don't think they go up as much as, what that would be, 18%.
Yeah.
I don't think Nike can come out with any news that's going to put them up, more than 18%.
Tell us, do you think, because I talked to Julian Wheeler from Shark Capital.
Have you got the long? The long, you need a line to say where it goes, where you go long. So going long at 70.
70, where are we?
So right at the money. Yeah, there.
So Julian was saying that he thinks if we get good earnings, though, this to him is a signal that Elliot's turnaround is working.
Well, Elliot's turnaround is working, because you go into the shops and you can see, right? You can see the new models that are coming out. Some really good shoes, as I am sporting. I don't know if we get that.
I was eyeing your kicks. They look very new.
Yeah.
You know, when someone comes in and the white underneath is very, very white. Are those new one? A new pair?
Brand new.
Oh.
So it's working. I just don't know, obviously, how. What he's trying to get through is get in a more premium offering. and you've seen all the discounting's gone, right? You don't see many Nikes on sale now. He's changed the online model, so there's not sales online like there was to get rid of the. So I think clearly the price is telling you they're not going to be great, but I think there might be enough in there just to get them back above that 70 level.
Nice. Also, just a reminder, everyone, the expectation is 28 cents a share in earnings on 11 billion bucks in revenues. This reminder, though, if you saw my short yesterday, represents a year-over-year change of -60% and -5%, right? So, whilst
Yeah, look at it quarter on quarter. That's the important thing.
yeah. The thing I'd like to see from them is if they say things like we expect, a huge boost because next year is the World Cup, isn't it?
That's right. Gavin Acker's just telling us that. And
Yeah.
that's exactly why Jeffries came out and upgraded them and put them on a buy rating because they said the World Cup's next year.
Yeah. And I've seen more and more people wearing Nike. I've been canvassing the schools near to us as well. A lot more kids wearing Nike gear and everything during Saturday, sports day.
Well, Saturday was sports day in many respects because it led into a wonderful Sunday when our American friends out there, I'm sorry, I hope you're okay. I hope you get over the fact that we absolutely stuffed you in the Ryder Cup. And we did it with great glee and we celebrated all night on Sunday because of your fans. And it's all your fans' fault how much that we rubbed it in your face. And we will continue to do so.
And Elliot was also celebrating.
Yes.
And James made a good point as well. Not forgetting the Rugby World Cup as well. Lots of people there celebrating the win against Canada.
What's the top player in the world? She is absolutely incredible. She's so fast.
Let's have a look.
I think she beat me at 100.
I mean, they're all very, 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 very skilled. And I think we've got such a great team. We have had the rugby players come to IG to speak to us because not so long ago, we did look at sponsoring women's rugby. Right. The other thing,
Looked at it and then decided not to.
big thing that happened whilst you're away, the ID card.
Yeah, I heard this was discussed, yes.
Yeah, we had a poll as well.
My friend had a strong view on it yesterday. He's going to leave the country.
Oh, and you said...
Well, I didn't know quite how illegal that you were.
Lots of people joined in on the poll yesterday, and it was really quite interesting. It was right down the middle.
I'd rather the British government have our details than Apple, Google, Amazon, who already do. Anyway, so I just don't understand what the stress is really. Unless you do something illegal.
Yeah,
and then
unless you're doing
it's a
something
problem.
illegal. Yeah, I think those people who were against it were saying it's not British, they're worried about the data falling into the wrong hands.
Well, if they can't protect it, but I mean, I'd certainly hope that, the British government can protect our data better than Jaguar can protect their plants.
Better than M&S. Please don't talk about Jaguar. That actually hurt me on a personal basis.
Oh, really?
I was trying to sell a car, wasn't I?
Well, they're probably more valuable now that they can't make any new ones. Right, now let's have a little look at our friends across in the talking about sports. EA Sports.
Yay! Right, I'm very excited about this because EA was something that I woke up this morning and last night had a lot of messages from friends across the pond excitedly saying, oh, is this going to happen? Is this going to happen? And it has happened. Let me just get you through the huge headlines.
The Saudis.
Yeah, the Saudis, 55 billion leveraged buyout. This means it's to take EA private, and what is key as well is not so much, the fact that it's, of course, one of the biggest deals in this space, but it's because it's before the Basel 6 launch.
Right.
Everything with video games and esports, can you tell I'm getting very excited here, is on the release of a very, very popular game series. For EA, it's Battlefield 6.
Right.
And every time they release a new series, you tend to see, if it's a very popular one, you tend to see the share price tick up. So like Nintendo would be like, the next Super Mario, that kind of idea. But this is also interesting because it does underpin Saudi's interest in the gaming and esports space.
Absolutely.
Which also is ironic because if you've worked in a Muslim or predominantly Muslim country before, this kind of is not really Sharia compliant because it's to do with gaming and betting and that kind of thing. But yeah, it's a huge deal. Going private means that EA is going to be able to be more aggressive in its monetization
Screen off,
strategies.
thanks, guys.
And just showing you Electronic Arts share price here, and add that to the workspace.
So it's about 34 billion of equity and 20 billion of debt. The news broke on Friday, and you had a chance to buy them. You had a chance to buy them there at about 189 they closed at. I was tempted, but I was in a tent having had 3 steins of beer at the time when the news broke.
Yeah.
So I managed to
Probably not a good idea with that amount of beer to, use your fingers on a small
Well,
thing.
just to take decisions of buying stocks that were already up 15%. That was more the thought behind it. So I did buy some more Oracle though.
Nice.
Oracle have had a shocking few days, dropping from 312 down to 282. So I'm now got a decent position in Oracle against my short calls in the Nasdaq. And we're going into the shutdown. So are we having a shutdown party?
Or the non-shutdown party.
Oh, they're going to shut down.
Every year we're this in this.
No, it's different this time though, isn't it? Because he's actually trying to sack them. So he's said, don't just furlough them like other years.
Yeah.
This is your chance to sack people.
But aren't there reports out there? Boston Frank, if you're out there, please, and also away from numbers, I know you travel a lot. Please try and get confirmation for me. I'm hearing all these people that were sacked through, Doge earlier on this year. They're all kind of being asked to please come back.
No way.
Because that's what I do. I make deals.
Right, let's do a poll then. Do we think we shut down tonight at midnight? Well, midnight Washington, it must be, I guess.
Washington time.
So, do you think we shut down? Yes or no? It's just a simple yes or no. It is not a only time will tell. It's a simple yes or no. 50-50. Let's see what we're going to do. Are we heading for shutdown? Because that will obviously impact the equity markets today.
Do you know how long the last shutdown lasted?
The proper one. 17 days, something like that.
35.
35 days. That's a proper shocker. Oh my goodness. Yeah, I remember because the main thing was not being able to get medical supplies.
And this time round, we always talk about this, but if we do have a shutdown, it's not just medical care, it's air traffic control, social security, law enforcement, all that will go.
They might have to stop throwing legal immigrants out of the country. If ICE go to...
Will we have a jobs number then?
And a jobs number, yeah.
On Friday.
Yeah, so we will this Friday.
There you see, Friar Tuck. Hundreds of laid off federal employees, right?
Yeah, hundreds, but they've sacked thousands of them.
They did sack thousands, but some are being called back.
Yeah, I would imagine that would be a... I'm not sure how accurate that news story would be.
Whilst you're in the tent, you must have been buying gold.
It certainly had a run, but the question is, what happens if there is a shutdown tonight? And obviously gold has benefited from the concerns around that. Is that going to be the peak? Is that peak gold if we see the shutdown go ahead for, say, the next week, fortnight, and you get all those concerns, obviously equities sell off, vol goes higher, the money has to go somewhere, it goes into gold, and then it's some kind of, a top is in place then. In the short term, I still think it goes to 5,000, but
in the short term, I think perhaps you could argue that there would be a pause, which is why I have recently stopped dollar averaging in. I'm still dollar averaging into Sarabi Gold and Greatland. Andrew McKelvey, thanks for keeping an eye out for that on
you're
me.
not tempted to take some off?
I have put some of my profits from other investments into the iShares physical silver.
Out the frying pan into the fire.
Yeah. Well, it's one that I've been musing, or rather speaking to Elliot a lot about. We're using the Bloomberg GV to look at implied volatility and expected volatility. And right now you're seeing a huge amount of expected volatility for silver. And as we know, silver tends to lag gold. So does platinum. And so I've also opened a position on silver miners. This is to try and catch the, ones. I think gold has had its.
How big is the move? Because I mean, gold just had its biggest monthly move in 14 years. So I don't buy things like that.
I think it might have further to run,
How much is it up?
So this is. Let's have a look at the monthly. And that is up 16.5%.
In a month.
Yeah.
That's when I take profits. That's just the way that I trade. I wouldn't be buying something up 16.5%.
Well, I think looking at the EV, which I'll capture for everyone, have a look. This is not something I plan to, hold forever and ever, but I think in the short run, it might still have room to grow.
Now, does AstraZeneca still have room to grow with its American listing? So it's going to be a dual listing. Interestingly, it is they've found a way to get out of stamp duty. So its London listing is now going to be called a depository share, and you don't have to pay stamp duty when you buy it. So I haven't heard of this before. So they still stay in the FTSE 100. Nothing changes there. Everybody's trying to save face and say, this is a win to keep them in London, which it is, because the horrific result would have been if they had gone only to the US. But we are very happy to have them staying here in London. I just wonder about this not paying stamp duty on when you buy them here now. I didn't realize that was an option.
Yeah, it's an option. And also Michael, who will be coming on later today to talk to us, is going to explain why it's been structured that way. And it's to do with saving the UK stock market. His view is that it's so broken that everyone has to realize that, the structure has to change, because many of the companies simply aren't coming here to list, because when it comes to share buybacks, the structures that are in place mean that the companies are out of pocket, so are investors, and so therefore they head across the pond.
But it's changing now though, right? So Revolut are now, in theory, going to have a dual listing as well. So are we just moving to a dual listing structure where you get a lot more companies taking the benefits of liquidity in the US, but they're proud to be British, and Nikolai is proud to be a British company. So, a big change there. Does that mean that Revolut can now access two liquidity pools? Which
would be fantastic for Revolut.
Yeah.
Very clever. Right.
And just remember that you can trade Revolut on the IG platform. So this is a pre-IPO opportunity to guess the market cap. And let's just see if we can get it up here. So I'll find that for you after the break, because it's currently 109 to 112 billion, but it's at the end of day one. So it's not on the IPO, it's the end of the... R6N is saying you don't pay stamp duty on IAG. Is that right already? So that's one of these depository setups as well.
Yeah.
Nice. Good stuff. Right, producer Phil's about to have a stroke if we don't go to a break because it's 7:57.
Right.
So let's do a quick minute and we'll see you back in 1 minute time. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome back, and we are fast approaching that moment when I get to ring this bell. Come on.
Silence. We've got
Hurry
another
up.
20
It's
seconds.
like a countdown, people.
Well, we can't open the London Stock Exchange early,
I
Anthony.
know. I'm waiting for the countdown for the people because we don't have a countdown here.
It's there. 10 seconds.
Oh, there. 5, 4, 3, 2, 1.
Oh, dear me.
Yeah, we're off. Let's do this.
Right. Or we can wait till it actually opens to put the screen up. Right. Yeah, but the stocks aren't open because there's a random opening in the first 30 seconds. So we're seeing a very slow opening. There we go. There they are. So train line. That's, oh my goodness, I haven't told you about my train journey yesterday. I went to Windsor to see my friends. And I was on a phone call going through Slough and I had to change it Slough. Next thing, I'm in Maidenhead.
Oh, no.
So I'm like 45 minutes late for meeting my friends. Right, Severn Trent. That's interesting. We're getting the few defensive up there. So Severn Trent up 80 basis points. Ignore that train line. That is just a wide spread.
Come on, Rolls-Royce. I
That's
think
better.
Kate Murphy is still in Rolls-Royce there. Fresnillo, whilst you've been away, miners have been doing really well. No surprise there.
Yeah, I saw Anglo's is like £27, isn't it?
You still holding on to Anglers because of what?
Nothing, Ange. You asked me, Robinhood, I've got nothing. Remember, I sold everything. Everything is in cash. My SIP, my ISA, and my pension, all in cash.
Wow.
100%.
I know where this man lives.
Barclays, Aviva, small up. Let's see what losers we've got.
Ooh, Entain, top of the losers list there, down 1.5%. Legal in general also down. WH Smith down as well. Diageo, that's been hurting for a long time. Wizz Air Holdings, clearly that deal is not helping its shares there.
Down 20 basis points.
Pearson is also down. I mean, it's looking quite mixed at the moment.
Yeah, so let's go across in Europe. Let's see what we've got. I've still got the Adidas versus no, sorry. I'm long Puma. So nice. We're at 4%. And long Porsche, short Stellantis. So long Porsche, short Stellantis, and long some Puma. Adidas having a good run. That's interesting. Ahead of Nike numbers to be up 1.7%. And then on the downside, Ubisoft, I guess that's post EA Sports.
Yeah. For those of you wondering and you haven't gotten on the EA Sports gaming action, there are lots of ETFs out there. There's Hiru, which also has EA in it as its top constituent, and there's also, of course, the likelihood that many other gaming stocks in the US hasn't captured, or rather in Europe that hasn't captured this move yet. So have a look at those as well.
Oh, it's been out since Friday.
Are we going to
It'll all be
Germany?
in the price now.
Right, here we are. Germany, let's have a look at that. The gainers is Adidas.
I think you're going to have to zoom in because you can't see anything there.
more than 2%.
I was watching yesterday and couldn't see anything on the screen at all.
MTU up 1.7%. Some of the banks there also rising. Hannover Re and Munich Re, the reinsurers, also having a good day. We've got Vonovia. I saw some news earlier about Vonovia. I have to check on that for you. But looking across at the losers, it's moving quite rapidly, so I'm going to rejig that. Simrise down 1.4%. BASF, Infineon also down there. Daimler Truck down 0.2%. We did see some of those companies, the Daimler Truck especially, move lower when we saw more tariff expectation from the US. You in Germany already when the drugs tariffs news came through, right?
Yes.
Yeah.
Right, currencies. What we got? We got cable at 134.40. Euro dollar. We don't put on there, which is quite interesting. We've got dollar yen 148, and then our US Swissy at 0.796. So there's your FX. Moving across to commodities. Again, nobody has fixed this, and nobody's put WTI or gold on. So our major commodities does not have gold on. I think it was Ronnie who was going to fix that, wasn't it?
Yeah.
Silver down 40 basis points, 4674. Oil down 55 basis points. That's on Brent crude, of course. And then iron ore sitting pretty at 777.
Nice.
Copper's had that big rally. That was the move on from last week that saw us up at 490. Of course, the force majeure at Freeport McMoran's mine, which is not great for Freeport, but it certainly is good for the likes of Antofagasta.
I'm going to get John Mayer on to talk about copper as well, because many analysts are saying that 2026 is going to be the year for copper.
They've said that for the past 3 years.
I mean, well, now that the Trump tariff madness has, they hope it's going to ease next year.
Tariffs,
Some of the
tariffs.
headlines, just to get through, we've got obviously that shutdown looming, and also Chinese factory activity extended its slump. Manufacturing PMI there, 49.8. Marks a 6th consecutive monthly decline, the longest since 2019. Clouding the growth outlook there. Otherwise, later on, we are expecting still quite a few macro events out there. Obviously, we've got Nike as well after the close. Rich, you staying up for that, I'm sure?
Well, my dear mother is in town. So I am trying to come up with some ideas.
You're not going to make her pay again when you walk off and they had dinner and then Rich just went, I got to get this trade. And then she's there going, I guess I'll pay then.
Your memory, you are an elephant. An elephant is jealous of your memory. What was that? That was a bid. Somebody got bid for.
Yeah.
And we were mid-dinner. God, who was it? I cannot.
And then she had to pay for the bill. She had to pick up the tab.
It must have been this time last year. Right, I tell you what, let's. It is the last day of the quarter, so let's look at some of the big performances. So this is a list that I like to keep track of, the European sectors. But that's the move on today. But I'm going to run you through the top performers in the quarter. So in this quarter, Angeline, guess what has been the best performing sector out of all of those?
Mining?
Correct.
Hey,
Mining, basic
ching!
resources. And the second best?
I'd say, I'm thinking about the rotation. Maybe industrial goods?
Close. They were fourth. So they were on the list. I'll give you a clue. You love to deal with them.
Oh, defense.
No, not deal in them. No, the banks. The banks are second best. So 17% basic and resources is up this quarter. Some of that, of course, being the Anglo bid, or merger, I should say. So Anglo's certainly helped that. And then the banks are up 13%, 13. The oils are up 6, and the industrials up 4.6. So that's the European benefits.
Nice. We have some movers coming through now. Entain is the top FTSE faller, down 1.7%. Playtech, Evoke, and Rank all also down. This is because betting stocks are falling after Reevesy reportedly hinted at higher gambling taxes.
Who did, sorry?
Rachel Reeves.
Oh, Reevesy, right.
Reevesy.
Did you watch her speech yesterday?
No, but I listened to you listening to her this morning, and I have to say, I thought there was a glitch on the stream as well. She speaks a bit like this.
Language.
Which, yeah, which Bojo, to be fair, also used. Cameron also used that to great effect, or rather, not great effect. But to some, it's called the Bojo gap. You know, you stop.
The Bojo gap.
Yeah.
Let's have a look at US. Of course, we've got 24 hours trading on IG now, and at 8 o'clock they actually show the right prices. So we've got Amazon small down there, Nvidia down 36 points. That's why the market's come off in the last 20 minutes. You've got Apple down 30 bips. Intel took a beating yesterday, down another 1% this morning. And then, Marvell, hasn't that been great? So we've got Boy Wonder himself coming in soon. Piers will be arriving. Kate Murphy loves Piers. She thinks he's very funny.
Just getting across some headlines coming out from where you have just been. German Chancellor Merz saying that the government there is in close contact with the USA in these decisive days, and also welcomes Trump's plans for peace in Gaza, best chance to end the war there. So just letting you friends know about this, because these are just coming through in the last few minutes.
Right, I see Gavin Acker saying ASOS is taking a beating, or ASOS. Down 11%, it certainly is. I'm assuming they've come out with...
Can I be devil's advocate here? I've always thought that ASOS is one to short, because even when they first started, I really didn't like...
11%, you're coming out with that?
No, but I've never ever thought it's a good idea to allow everyone to send stuff back, and at no cost.
Yeah. I mean, that was the 2022 reason that they came down from like 40 quid to about £8, I think.
Yeah, so I've always steered clear of it.
Have you been short them?
No, because I just don't understand how this can work. But I have friends who work in retail, and they say that they've binned, stock that have been returned just because they don't have the ability. The clothes, they'd rather throw them away rather than try and get them back into circulation.
Well, let's see what they're actually saying this morning. Annual revenue would miss market expectations against the backdrop of weak consumer demand and that profit would come in at the lower end of forecasts. So previously forecast 130 to 150. So
just get
what's it removed? Is it removed it completely, or is it given a new one? Revenue would come in slightly below market expectations. Analysts on average had expected total sales to fall, so they were already falling 8.4%. And there you see, so breaking that support level, where does it stop, Ange? Where's the next support?
I mean, we're talking about lows last seen beginning of April 2025. If we break through that, then, you know, we're going to head to levels, the lows of 17th of March 2025. But take a look. If you go back, I'll show you how much.
Yeah, there you go. That's when they started letting people sit back.
Me. Yeah. Yeah, and it's well known in the industry that their warehousing is a bit of a huge nightmare, really. Got guess the chart coming up soon.
So it's which we've moved. I love that it was how democratic the choice was. So the viewers decided we would move it. Is that right?
Yeah. I think producer Phil put it on Discord and had a vote on it, and
I
it's
like this.
moved. Yeah.
So any other votes, then we have them on Discord.
Yeah. Who wants to vote that Rich buys all of us, including Discord, lunch, since he's sat heavily in cash right now? I'm
taking you out for your whole social on the back of Julian Wheeler's MongoDB.
MongoDB.
I apparently have to pay for the whole social.
Nice. RSAX. We've got guess the chart, but we will look at Carnival, right? And we'll also take a look at that in fast markets. But let's have the guess the chart. Is it US or UK? It is US. Let's do it.
FTSE, DAX, NASDAQ. Gold, the market sings. Let the stories be told. Hear the bells at 8 a.m., the kingdom's awake. With candlesticks arising, the charts overtake. From Handel to High Street, the rhythm is clear. The brokers are marching, the futures are near. Lloyd's, Barclays, AstraZeneca, Shell, and BP, Glaxo, Tesco. Trade me for right, trade me forever. With IG we dance 11,000 endeavors. Trade me for right, trade me tonight. 24/5 we ignite. Strings and guitars in a furious flight. Numbers are dancing like candles at night. ETFs glowing in gilded refrain. We laugh at the charts, then we play them again. HSBC, Vodafone, Rolls-Royce. Markets rejoice. Markets rejoice. Trade me for right, trade me forever. With IG we dance 11,000 endeavors. Trade me for right, trade me tonight. 24/5 we ignite. This is not financial advice, but the harpsichord says buy, and the bass guitar says sell, and the choir screams, guess the chart. Trade me for right, trade me forever. The stocks are alive, every note is endeavor. Trade me for right, trade me tonight. 24/5 we ignite. FTSE, DAX,
Welcome back, everyone, to Fast Markets. Loving Kate's reaction there. James says, thank you, Kate, for making his efforts feel valued, because That's not my genre to say. Right, and the winner. Guess the chart. Jim Paxman. Well done. I could not have got that. Did you get it?
I haven't heard of that, so it's a new one on me.
Who chose it? Producer Phil. Wow. Okay. Right.
I think we need an inquiry into the process of choosing. It was much better yesterday but it was my suggestion. I definitely yesterday was a much better stock. So.
Compliments to oneself.
It's a Tuesday morning. Why not?
Right. Let's get to fast markets. We were asked about Carnival earlier on by R6 Sana. Let's have a look at the chart there. Carnival.
Carnival was interesting because they smashed expectations. Well, I did smash. They beat expectations and they raised their forecast, and still the stock went down. So it's not to borrow a travel pun, but it was better to travel than to arrive for Carnival yesterday. But again, this is one of these sort of even pre-pandemic fallen titans. They could do no wrong, really. Everyone's going on cruises. My parents were on cruises all the time. And then just 2018 onwards, they just haven't been able to recover. But as you can see, higher highs and higher lows since 2023. So moving in the right direction. This is what recovery looks like, isn't it? Stocks take a lot longer to recover the losses than they do to fall. If the markets fall 3 times faster than they rise, and exactly what Carnival is doing. So maybe it's just a bit of post-earnings disappointment. They've rallied hard since April. Not time to call time on the rally just yet, maybe.
It is starting to show signs of fatigue, though.
A little bit, and you can point back. I think we're almost. You'll have to. Is that the same sort of high we reached in 2021?
Yeah, this is the monthly chart.
Yeah, so that's a key area to watch, as the theme is now. Areas to watch, not levels to watch. Around here, it's not surprising that you see a little bit of caution, though. I think last month's candle did close above it, so there's a notable improvement in the stock. So it's very much a case of 2 up, 3 down in terms of those monthly candles, isn't it, really?
Yeah.
Look a bit.
Thing to watch out for RSACs, if you have a position and you're looking to decide whether to hold or continue dollar averaging in or to start dollar averaging out and cut your position, is that pay attention to anything that is announced by Trump that might weigh on discretionary spending, especially travel. And also, of course, I think it was the boss of Carnival that also did highlight that there were higher expenses. This is the interesting thing.
At Carnival.
Due to docking.
Right.
Dry docking of ships for maintenance. So those of you that
Scraping barnacles off the bottom.
there are not enough ships being made, so they have to maintain them.
Yeah.
So pay
They
attention.
take a while to build, don't they, cruise ships?
I read a really interesting data point. Most of the ships are made in South Korea, something strange like that.
I was listening to a podcast about this. Commercial shipbuilding, 50% is China, of which 50% of that is one single yard, and the rest is mostly Japan and South Korea.
There we are.
There you are.
IAG, let's zoom into the skies to IAG, and this
Sticking
is
with travel.
Yeah, sticking with travel. I just feel liking my segue there. And IAG has really done quite well recently, but
Did we
also
cover this yesterday? Did we do
think
this
we
one
did.
yesterday?
I think
But
we
it's
did.
still valid, isn't it?
Yeah,
I think
it is still valid.
It's and I'll repeat myself. It's the run higher in April, pull back, run higher again, and now it has gone sideways. As we talked about with gold, moving sideways for months and months, and then when it goes, it really does go. So not the same. I'd say the same thing will happen with IAG, but it's the stock digesting. Interesting. We looked at travel stocks a while back, and we discovered that the best time to buy these is actually in the autumn period, once the summer travel period is over, because then you get the updates that come through in the catalyst. So maybe IAG just having a rest over the holidays, taking the summer off, and then starting to move higher once again. So the trend still there. It doesn't always have to move relentlessly high every single day.
Yeah, just taking a look at the client sentiment as well. Reminder, friends, that this is based on IG clients, not the wider universe, but just IG clients. And yeah, IAG I think is one, if you wanted to take a look at airlines, perhaps IAG is one to play into the autumn, right? Gavin Ackers, if you put the chat up for me on the screen so that I can have a look. TTD for fast markets, please. Let's have a look at that.
TD.
There we are. This is, I have to say, not one that I'm familiar with. Are you familiar with this?
Trade desk. No. It's the name's cropped up. I recognise the name. That's about as far as I can say at the moment.
This is the daily chart there.
You can channel in at Axel Rudolph and look at that. Is that probably support from back in, if you zoom out a bit?
Channel my inner Axel Rudolph.
As we all seek to do every day. I
Yes.
think, reaching a Zen level.
Yeah.
Yes, so that's what? So that's the April low.
Yes.
So there's support being tested once again and holding and going back. It's wonderful when you do this on a chart. If you find
lovely.
a line, you zoom out, and then suddenly you notice that it has been important before. So clearly there's something, whether it's a valuation, whatever it is, when it gets down here, somebody smashes that buy button and it has bounced. For the time being, of course, in the nature of these things, the support resistance lines are there to be broken. For the moment it's holding, we're waiting to see if it can recover.
And similarly, if you drew a line on the top, you could, look at where the bag holders are. And so you can see that, around the 92.59, there's some bag holders there.
Notable right where it got to that top back in June, July.
Yeah. Early in September, let's have a look at, this is the daily, so let's cross over to early September. That was August. This is 10th of September. Yeah, so around, their shares fell because Morgan Stanley downgraded this advertising platform's
Is that what it does?
rating. Yes.
I guessed it was finance from the trade desk, but there we go. Shows you what I know.
Yeah, interestingly enough, mounting concerns over growth. Right, so that's a really interesting one. Let's have a look at Aviva now, crossing over to insurance. Do you use Aviva? Oh.
I have done in the past, yeah.
I have my house insurance.
What were they before Aviva? What were they before they rebranded to Aviva? I can't remember now. Somebody will know. Somebody in the gallery will know. They're old enough.
Friends, do you know? Norwich Union? Was it Norwich Union?
Norwich Union, that's it. Thank you. I think I know who knew that answer. I think I kind of can hear them. That makes sense. Absolutely stormer chart there. Good dividend payer.
Let's have a look at the dividends there. Yeah, 5.4%.
5.4. That's a very, very chunky yield, but no sign of it being cut back either. One for the longer term, and you have to be patient. If you go back to the chart, you can obviously see how we've had, again, very good year, but you had to suffer through most of 2024 with the share price going nowhere. It does move in fits and starts, doesn't it, Aviva? But probably one that's come under focus because of a good UK stock that pays a dividend. It's bound to look cheaper to a lot of foreign investors. So the renewed popularity of UK stocks certainly has helped them do really. It's not often you see an insurer we're not quite double in value in a year, but well on the way to that.
Do you do any DIY? I say to the man with probably
yesterday it was Nike.
the skin on his hands, ever. Do you? Which
I leave it to the other half. She does more DIY.
I'm asking this because those of you that do DIY, like my unfortunate self, if you do DIY, do DIY. Take a look at Hornbach. Hornbach is the German version of our B&Q.
Kingfisher. Okay.
It is down almost 5% there. And this is the daily chart there. That big move here because the company reported Q2 earnings below expectations. They operate Hornbach Baumarkt. I hope I haven't destroyed that. Jugger, I hope I pronounce every K and T. But there's kind of like the B&Qs of Germany.
Yes.
Much bigger to say. Right, we've got peers coming up soon, but have you got time for one more? Glencore.
Good one yesterday, of course. Copper price is doing well. Gold price is doing well. Very, very strong. Yesterday was a miners' day on the FTSE 100, which helped to offset the weakness in oil prices, which dragged BP and Shell down. So you had miners and pharma, of course, yesterday, but not a bad move so far for Glencore. What's the longer term view look like on that one?
Yeah, so having a look zooming out there, we are at levels last seen February this year.
But that's not a bad recovery, is it, from a trend perspective? And again, we're above those July highs, so that's good. You can tick that box quite nicely. That's important. signal that maybe they've managed to break that run of lower highs and lower lows.
What I also like looking at here is, I'm going to try and show you with the rectangle. This is very strong buying momentum here. When you see so many green candles.
Yeah, marching higher, very solid.
Yeah. And also, you know, don't forget that if we see another March higher after that correction, we'd have a proper amount of price action above the 4 EMAs that I've drawn over there for you. And it's quite nice as well sometimes when you see that this is happening without a surge in volume, because it is then what I consider
steady
organic.
Accumulation,
Yes.
steady, not just sudden buying. So what's the weekly chart look like on that? Just
It's organic, yeah, not like a sudden because of one news event.
Yeah.
Let's have a look at the weekly.
healthy. Okay, so still a less encouraging picture on the longer term chart, but notable we haven't been above that 50-week EMA since, don't know, a long time. Let's see, when were we the last time? 2020, some early last year. So that's decent recovery.
Yeah, good one. It'd be interesting to see how it, in terms of valuation, how it compares against its peers. Right. We have to go, but yes, Andrew McKilvey, I do have a position in Robinhood, so I did see that move overnight. Unfortunately, I was hoovering out my car because I'm selling one car. Yes, keep a lookout. We will discuss that for you. Will the FTSE 100 sell off? Some believe it's already started. Hasn't moved a lot recently. Right, thank you very much, Chris. Always a pleasure.
I'm off to do some DIY.
Piers will be up next, so stay right there.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Good, welcome back everybody. How are we doing? This man doesn't shut down. Oh no, even if he doesn't get paid, he still turns up.
Yeah, I'm here. And you mentioned shutdown, so should we talk about it?
Let's go straight into it because that is the subject of the day. Markets already selling off from 7:30 a.m. What do you think?
Well, I mean, I think that the futures sell-off that you're referring to may or may not have anything to do with the shutdown, because when I woke up this morning and the shutdown was well and truly the headline in Bloomberg, it was the futures were on the highs of the day. So listen, the US government shutdown, I actually did a TikTok on this just a minute ago because everyone keeps asking me about it. And I'll say what I said on there, which is that this happens once a year. I think it's happened once a year for the last 15 years. I can't remember a year that it hasn't happened. It's
Is it different this time?
Listen, it's becoming less and less cared about in the market, just like everything else for that matter, right? 15 years ago, when we said the government was going to shut down, and the market would gap down 2.5%, and then blah blah blah, and then we get through it, and obviously doesn't shut down, or it does for a short period of time, and it's all just political noise, and then we get through it, and it's never happened. But it's just the same way that many other things in the market are being completely ignored right now. This is too. Apart from in the gold market, apparently, the latest excuse, of course, for gold making a new high this morning was that the government shutdown, but then, of course, the equity market couldn't care less. But the question is, to answer your question, does it matter this time? Listen, I know.
Or is it different?
I know
because
the way.
I fancied we actually go into a proper shutdown as we did.
Yeah, I know you, and I know the way your brain works. So I know there's probably very excited about the government shutting down properly, as am I to a degree, because I would like the market to sell off more than it has. I would love all these. Sorry guys, but I would love retail to have a lesson in what happens when the market sells off, because that's what I've been telling everyone. I'm telling everyone to do that, and it's extraordinary getting hundreds of messages from people in the retail universe with comments like the market can only ever go up and stuff. It's terrifying.
TikTok really gives you an idea of the way
people
certainly that Americans think, and the retail community that have only been doing it for 2 to 3 years, always buy the dip.
Some of them have only been doing it for 2 to 3 months.
Yeah.
Which means they've never seen a market go down more than 1% in their life, which is terrifying.
And they've always got the insurance of, now April taught us a lesson, because April it went further than we thought it would.
Yeah, absolutely.
But this reminds me a lot of 2018 in January, when we were going into the first day of February, and we got a comment from Jerome Powell. And that comment was surrounding rates, and similar to what we had last week from Powell. And you're right.
Sorry,
you're busy.
Yet again, got a trading phone call I have to do with.
But of course, volatility was at 17, as it is just now, and it doubled.
Yeah.
And it doubled in a day. If we get a shutdown, and that leads to a increase in vol, stocks are up with their head in the clouds.
Listen, the market's showing a hell of a chin, to use the expression from one of my biggest and oldest clients and friends. No one would like the market to get spanked more than me, and you maybe. But is it going to happen? I don't know.
Maybe not with this.
I'm positioned for it. I've got my QQQ short. I've got my quantum shorts, which we should probably talk about in a minute. I got back into Palantir because by the same reason I got out, the same reason I got back in, based on the price action, which has deteriorated. And then I've got a whole bunch of longs, but every single one of my longs is a completely and utterly unloved, uncrowded stock that will have limited downside and be very, very uncorrelated to the market.
It's almost like your stocks are the way that you look at yourself in the mirror.
Yeah, there he is. So listen, I'm prepared for a sell-off in the market, regardless of the government shutdown. Whether the government shutdown is a catalyst or not, I don't have any faith in it, because it's been happened. I mean, there's no evidence of it ever happening in recent history.
Trump is the man of doing things.
Trump is the man of pushing things, and he has proven that he's willing to do whatever it takes and take short-term pain in the market to get his point across.
Yeah,
we've seen that. So perhaps he will push it further this time. I mean, I did have a bit of an instinct of that this morning when I woke up, I must be honest, because he's also got some room to play with, right, when the market's trading up here. So.
Now, you mentioned quantum there. That's the first time I've heard you really mention it.
Well, we spoke about IONQ when I was recommending it on the show about 4 months ago, when it was trading at 23.
Yeah.
I sold it at 55, and I think I spoke to Angie about it, actually, not you. And it's now trading it. So when I started talking about it, it was at 23. It's now at 70, or whatever it is. Listen, this one, D-Wave and quantum computing, which are the three big quantum names, this is the flagship, right? This is the one that's got it's like the picks and shovels. They refer to themselves as the NVIDIA of quantum. On CNBC, they had a huge conversation. They have been endorsed by the likes of Jensen Huang. The problem is, though, guys, is that they have $49 million with an M of revenue. And they have a $20 billion market cap.
Well, I'll tell you what, let's step back, right? People that haven't yet read up on quantum, give us a real snapshot of what it is.
So quantum is, if you boil down quantum into its most basic definition, it is what it does, and it's traditional computing deals with data in zeros and ones, which are called bits, and they can only be zeros and ones at the same time, and they have to, and then, so therefore there's only a finite amount of data and speed at which it can process that data. In quantum, they're not called bits; they're called qubits, and they can take the form of zeros, ones, or zero can also be a one, and they can morph. And they can therefore, by definition, do millions of more tasks due to the compounding of that mathematical equation.
Wow.
And it's obviously we can go much more in depth of that explanation, but I find that simple explanation makes it your brain suddenly realize what the difference is between traditional computing and quantum computing. Qubits versus bits, and qubits can, by definition, perform. But the difference is though, and this is why there's been lots of concerns, and people like who's that guy who was Martin Shkreli, who's the guy who was arrested he's a smart guy, but nonetheless got some pretty punchy ideas. But he's massively anti-quantum amongst other people because they're not. Quantum computing is great for very high complex tasks. So it's great for biochemistry. It's great for, and this is why I think it's quite a no-brainer actually, is because it's AI by definition can be helped by quantum.
Yeah.
Right? It's like the second derivative. Quantum's not good at doing Google searches, right? Because they're just very basic binary tasks. It's very good at doing highly complex biochemistry, high-end mathematics, AI, very high complex tasks. But the world's moving into more complex tasks as a standard with AI. Definitely. So therefore, by definition, quantum, and this is what Jensen's been going on about, and he's obviously famously done a massive U-turn, right? He had a shocker 6 months ago saying he didn't even know that there was a listed stock.
Right.
He admitted, he said during his conference, I don't know of a listed quantum stock. Right now we've got ones that are trading at $20 billion, right? And there's four of them. So my point being is that I liked them. I didn't love them. I said they're highly speculative. About 6 months ago, now I put on a short in IONQ and QBTS 3 days ago, when it was just trading at an RSI of like 91. And again, the reception in the retail universe is hilarious. You know, these people who probably don't have a clue what the company does. They don't have a clue what the valuations are, which by the way are 400 times sales, which makes Palantir look pretty cheap. And they just only see it going up, and their entire world is just going up. They come out with comments like, "Oh God, you're going to lose a lot of money being short quantum stocks."
Because stocks like that always go up.
Of course, but you've got to just, we're at a moment now where the exuberance, particularly in those things, is pretty.
Yeah, this is where you really see it's meme stocks, and it's stocks like these that have no sales, that are obviously completely unprofitable. Yeah. So what are its revenues? Why has it got any?
So, well, because they do, and this is why I think that these are, if there's going to be a winner in the quantum space, it'll probably be IONQ. They've signed multiple contracts. A lot of them are in Japan, and what they do is they sell. And I won't get super technical because it takes a while, but I can make it basic. What they do, and that's why they're called the picks and shovels or the NVIDIA of quantum, is they sell a software kit or software toolkit to their customers, which gives them the ability to produce and build their own qubits.
Right.
Okay? And by definition gives them. Think of them as giving you the GPUs that NVIDIA sell GPUs to hyperscalers and data centers so that they can build their AI models and teach their language models. These guys sell machines that make qubits, which is essentially exactly the same thing. You don't need to complicate it too much more. You just need to know that. And they've got customers, they've got real customers, and the customers are building, but the revenues are still so small. And listen, if this becomes a commercial thing, which it may well do, then revenues will explode. But it doesn't take away, that's not going to be happening in the next 6 months. So the question is, when?
We're talking years away, aren't we?
I think so, but the goalposts keep moving, right? Yeah. We were told by the Jensen one, who's one of the greatest technical minds at the forefront of all this. He had a bit of a shocker, quite frankly, but that he moved his goalposts from 10 years to within 5 years, and those goalposts keep moving. This is a moving target, quantum, and quite frankly, if you want to look, it's potentially very exciting, right? AI is AI, right? There's probably loads of trades, but they're all massively overcooked in the short term, and we don't know who's going to win, who's going to lose. The next one after AI is quantum.
Okay, so one to buy on weakness, but it's just a little bit as who said here? Jugger said it just got a bit hot at the moment.
Listen, IONQ is the one that I would focus on. The other like D-Wave and quantum computing. These guys literally, if you look at what they actually sell, it's a slightly different thing. It's potentially got very small market. And they've got almost no revenue. So it's. I think that there could be a 20 to 30% pullback at least in IONQ. I'd wait for it to get back into the 50-something zone. But even then, you've got to be careful, right? I mean, listen, you've just got, it's one of these things. You've got to allocate a small amount of your book because it's highly speculative. Wait for a big pullback. You've missed a lot of it. Fine. Wait for it to come back. Close your eyes, buy it, and just don't look at it for 10 years or 5 years or whatever it may be.
Exactly. Yeah.
So that's the way you've got to play it, and you've got you can feel confident in the fact that there's literally millions of retail people out there who've got your back.
Yeah, exactly. Which leads us nicely onto Palantir because it's exactly the same thing.
Yeah, although the retail universe on Palantir is, in my experience, which is talking to loads and loads of people about it, is a little bit heartwarming actually, because there's not many people. There's a lot of people agree with my thought process on this, which is interesting. And
a reminder what that thought process is.
That probably comes because the stock has stopped going up, right? So and everyone else has got their focus on stuff that's going up 10% a day. So it's very fickle and very subjective. So and the price action, again, the retail world, without even probably thinking too much about it, do well in the fact that they buy price action, which is actually what professional traders do. If you ask them what they really do, they buy and sell price action. So, but Palantir's price action has stalled, right? Yeah, it tried to get through. What was the high there, mate? 187.
It was exactly 189.
Okay, so it attempted intraday to get through that number the other day. It just had a random big move up, and then it reversed and closed the day red. That price action is different, very different to what we've seen for months and months and months.
And yesterday in general was a little bit of that, wasn't it? The market thought it was a bull market again. It had that.
Yesterday just went bananas, and then suddenly we went, hang on a sec, we're not quite at that stage still.
Yeah, we're not ready to just take it up for absolutely no reason again.
Yeah.
And
is this a live chart of the US of
this
cash?
is, yeah, it's getting.
So it's on the lows of the day.
Yeah.
Great. Good.
But that is a big retracement from 3:30 p.m. yesterday, which you saw the momentum just absolutely stalled.
And I don't know how much of that was the market having just a reality check of what's really going on, or whether the news of the US government shutdown was starting to hit the tape. It's hard to tell. But I like to see that the retail world, so the professional world, are kind of having a moment here where some reality, where they're probably, everyone I speak to is very, very happy to see this market stop going up.
Yeah.
Right? No one wants it to continue going up.
But how much so far has just been repositioning and reallocating funds into Google, into Apple?
Well, this is the thing, it's just a big rotational machine, right? But the question is...
Oracle.
But you rotate and you rotate and then you rotate and then you...
and then you realise everything's too
One of
high.
my biggest bearish clients who used to be bearish on everything, he used to just go, you know what happens when you stop rotating, right? Fall over.
Gravity hits.
There's always something to rotate to, but I feel in the US market, we're running out of things to rotate into.
Yeah.
Google's overcooked. I love Google, but I'm out. Apple, we're clutching at straws with Apple, quite frankly. Oracle's had actually a massive reversal, and there was actually a big sell note coming from Citigroup out on them.
Is that why they've gone down so much?
Well, it wasn't just that. It was also just because it's overcooked, man. It was up, God knows how much. I mean, it's everyone just gets so excited, thinks stocks can only go up.
But it was a fundamental change.
It was, but it's already re-rated twice. It's had two of these, right? 25% earnings moves. Right, in a market that's overcooked, and it's Oracle, so there's loads of question marks around it. It hasn't quite made its way into the Mag 7 conversation yet. It's on its way to that. There's still doubters. There's still people trying to sell it. So it doesn't surprise me at all that it came back, and I'm glad that I stepped away from it. Quite frankly, I mean,
I've been buying on the way down, which goes against your advice yesterday on your TikTok, saying, look, if price action's going against you, don't buy more.
Yeah, I mean, that's something that I've been guilty of many times in my, usually the other way around, trying to sell more. But no, it's the same principle, right? If the price action is against you, you've got to take your emotion out of it and stop.
So I'm going against you in Oracle here. I'm picking them up.
Yeah, listen, I quite like buying a little bit of Oracle to maybe later on today, hopefully lower, it will be lower.
Yeah.
281 is a lot better price than 330. I like that a lot.
Oh, absolutely. Yeah. I mean, that was just wrong. Even 312, 315 felt a little bit wrong.
Yeah.
But below 300, I started accumulating, let's say.
Yeah, no, I don't disagree with that. I mean, listen, it's a high quality name that is re-rating, that has valuation support. It's just you've just got to be a little bit wary of it, because the thing is, again, it doesn't quite have the support. Like Nvidia has an army of people that support it. So does Tesla, so does Google to a degree, so do loads of those names. Oracle doesn't quite have that army yet. So Oracle acts like a stock that should act like it did back in the day.
Yeah.
Right.
Traditional. Yeah.
You've got to be careful of the ones that are already in the. I used to refer to it as the guest list. If you're on the guest list, you've got millions of people, whether it be retail, cults, supporting you. And traditional stocks that are not, well, Oracle is getting on that list, but lots of them, don't. They act normally.
Okay, so we've got the VIP guest list, which is the Mag 7.
Yeah, or Mag 9, I reckon now, if you add in.
Yeah.
I mean, Broadcom's part of that equation.
And then
Netflix.
And then we've got the guest list.
Yeah.
Which is more your ordinary stocks, and then we've got the NFIs.
Yeah, exactly.
And Marvell was an NFI, and look what it's done.
Let's talk about Marvell, which is slowly getting its way onto that second tier guest list.
It is, isn't it?
In terms of price action, it's right up there, guys. I mean, listen, this stock has not had a down day in 12 days. I mean, maybe it had a small one, but this was down 18% on volume, no buyers anywhere to be seen on the earnings. And I said to Rich at the time, and
everyone was laughing at you at home.
I literally
laughed at you.
I sent a TikTok out when it was trading at 62, and I could show you the TikTok that says, "I am buying Marvell here." But the point is that, and by the way, guys, I have not traded this well. I sold it way too early. But nonetheless, anyone who listened to me, and I don't listen to myself, it's exploded. We had a $5 billion buyback, and most importantly, and this gets no headlines, which is fascinating. The CEO came out again last Thursday, so the day after the buyback, and updated us, said the same things that he said at the Bank of America conference, right. 3 months ago, whatever it was, which was that, and the market is slowly starting to hear what they're saying, which is that basically they're on the verge of having their Micron moment. Now listen, these guys do not do memory. They do custom high bandwidth. It's complicated. We have to go into it. Do another show for it. But it's a very unique product that only really they do, and the data centers need it for AI, and it's slowly coming into the system.
I see your little brother has entered the chat.
Who's that one?
Lee James. This guy speaks nothing but absolute gold. Could listen to this all day. That's what you were doing. You were typing on the chat under a different name while talking to me. That's impressive.
Very funny. Good morning, Lee. What a hero.
Right. Okay. So let's move on. Well, I've got to take your ego down a bit now. Plug Power. You've actually started to reduce.
That's not going to help to bring my ego down. I sold that at 305, and it's now back down at 220.
Oh, give me a chance. Come on. Right, so Plug, the price action as you.
Yeah, so hang on. So Plug, those of you who've been following the show and following my comments on Plug, this is highly volatile. But look at it. I mean, it worked, right? 3 was my price target. Out. Keen to start buying it back though, because this stock is part of the short squeeze cohort, and what I find most interesting about this is that look at the power demand, right? Everything you wake up every day and it's consumers are getting squeezed on their household budgets. There just is not enough power in this world. Yeah, it simply is not. We're grabbing at as much as we can from every corner of the earth, whether it be coal, nuclear, traditional. We need more power. And this train is now steaming ahead. So
isn't that a quote from Star Trek?
Yeah, I don't know. I don't watch that show.
We need more power.
That's so you. But Plug Power. I mean, listen, guys. How long is it going to be till? I mean, look at its bloody name, for Christ's sake.
Yeah.
I mean, how long is it going to be until we realise that these guys actually do have a product that creates power?
And let's just remember where they came from.
Yes. I mean, listen. It's having a pullback from after a 200% rally off the lows, and yeah. So he's showing you the chart from way back. I mean, this was the darling, right? This was going to be...
Yeah. Well, actually, that isn't, it looks like a Blockbusters, or but
Well, the reason for this being is that two reasons. One is, one major reason actually, is that the hydrogen, bearing in mind, take that chart back 30 years.
yeah, of course.
Let's
it's
talk about
zero,
hydrogen.
isn't it?
Let's talk about hydrogen back then. Okay, there we go. Now we can put things in perspective. And if you go and look at the other ones, the other hydrogen stocks, there's three of them. What year was that? 2000, right? So that was, what year was that?
Post-COVID, 2021.
You can take them back further than that, by the way. And they're much higher.
Right. Go on.
Much higher. So, so take it back like 30 years.
Oh my goodness. I don't know if...
Can you do that? Anyway, it's much higher than that.
Right.
If you take it back.
Okay.
It's like 4 times higher than that. So when hydrogen first burst onto the scene, and I'm just trying to get you, just because I can't remember exactly what year it was. It was about 30 years ago. These stocks were thousands of % higher than they were even at the peak there.
Wow.
Okay, they're crazy charts, and that was because it was at the time. It was like, oh my God, this is just absolutely crazy. We can generate power through water and hydrogen, and the world went bananas, just like the way it is now for quantum and AI. But then, of course, it became obvious that they were 30 years ahead of the technology being in place to be able to actually produce this stuff in a commercial way. So the stock collapsed and went down to zero. And then we waited until 2021, and then we got another big spike, and then a big excitement. And these guys do have a product that they sell to Walmart and Costco, and they make the fuel cells that go into the forklifts in the warehouse, et cetera, et cetera. They just haven't quite built the product yet, and had the regulatory mandate as well, and regulatory backing, which has just changed, I might add, to turn this into a large-scale commercial product, partly due to costs and partly due to just the capacity constraints. So my question is, Plug Power this is not a speculative company, right? They have a product, they sell to the 4 biggest retailers in the world. They can build power and generate power. Why can't? And it's slowly scaling up. Plus, they've now got the tax credit support from the government. So listen, it's a Hail Mary trade. This could end up. I just think you've got to have a small amount in this stock because it's 33% short interest. If this suddenly becomes on the agenda, on the power agenda, it's going to be a lot higher.
And there you go. So 2,000.
There we go.
Above $1,000.
Look at that. There we go. Thank you for bringing it up. Now I just want to show everyone. Look where that was trading, and some of them were even higher than that. But Plug Power is it's a fascinating story, to say the least.
Right. You told Morgan Stanley they were wrong yesterday in Novartis.
Yeah. So not Novartis. No, Novo Nordisk.
Sorry, Novo Nordisk.
Yeah, so Morgan Stanley came out with a note yesterday, which is interesting. This is one of the noisiest stocks I've ever come across in my life. There's at least 3 to 4 relatively important bits of news per day. Again this morning. What's it doing right now, by the way?
It is down 2.7%.
Yeah, okay, so it's getting hit. And again, there was more news overnight that they pulled out of was it cancer? I can't even remember the news this morning. Sorry, I've been looking through so much news. They pulled out of a side project of theirs, which was essentially, I think it's, if you can bring the news up.
FTA.
There we go, that partnership. One's a potential, no, that's a different thing. No, it's the other one. Anyway, they pulled out of a partnership with regard to one of their side projects. But there's a lot of, plus there's 3 analyst reports out this morning, one from Goldman, one from Barclays, and one from someone else. They've got overweight ratings on it, but they're quite lukewarm. There's a lot of opinions, and then of course Morgan Stanley. Listen, Morgan Stanley are one of the only brokers in the world, in my view and in reality, who genuinely impact stock prices because they are first class. I respect them, I listen to them, and generally they're very, very good. All I'm saying is that I don't agree with having an underweight rating on this stock because even they don't agree with it really. It's a 10% lower than where it is now, so it's not much of a trade. And then what? You have to buy it again. Yeah. So I think that this is going to be noisy, it's going to be volatile, I think it's going to be frustrating, and you have to basically have a small position and just not care too much about the noise. But it is a very undervalued company, right? Let's not forget this is now 12 times earnings. We'll find out what happens on their next update. It's a battleground, right? GLP-1 diet drugs is a massive battleground. My major hope for this company is that they'll use their big balance sheet, because they have a great balance sheet, and they'll buy someone. And I hope they're going to buy one of the US guys, Viking Therapeutics, for example, which is the one that I'm I'm been banging on about for
Have a
ages.
look at Viking.
Yeah, I mean, Viking's fascinating. I mean,
I've
this
never traded this actually.
this company has been up. This company, look at what the analysts are saying about this company, even though they missed their trial data the other day, right?
Right.
The analysts come out almost on a daily basis, reiterating their price targets, and the price targets are at least 100% higher, if not
Really?
200%.
Oh, you're talking me into this. I like the
Yeah,
sound
yeah.
of
This is a crazy. I've been long this for ages and just waiting. It's a fascinating story.
Jeez.
Yeah.
Wow, that's not often you see this, is it?
It's very rarely do you see. Look at those price targets, right? BTIG came out reiterating just 2 days ago, 125. Okay, these are proper moves.
So this is a binary event?
No, so this is not. So these guys are involved in. So the core of they have $800 million on the balance sheet. So they're not, unlike a lot of high growth or speculative biotech companies, they don't need any money. The efficacy of the drug. So they work on the same molecule that Novo Nordisk do, right?
Okay.
So they have, and these guys are trying to come out with a pill as opposed to injectable form.
Right.
And the pill is the next stage, because at the moment, Ozempic and stuff is in injection.
Oh, I didn't know that.
The pill is obviously more easier for a consumer, right?
Yeah.
So it's a race to the next stage of who can do the pill. These guys are involved in that. They came out the other day with some phase 2 trial data, and it was actually 13% effective, which actually puts them in the higher range of the big guys. The only problem is in the trial, there were loads of dropouts in the trial. And what that indicates to people who know what they're talking about is that that human beings drop out of these trials because they're vomiting on the side effects. It's a nuance. So the stock was down 45% gap down, which is dramatic because they're not out of the game at all. The drug works. It's just a matter of tweaking it. Now, the analysts have had every opportunity since that moment to downgrade or say something negative. The opposite has been said, and it's very rare to see that, right?
Yeah.
The analysts are coming out with 200% higher than when we are now, with all the news on the tape. It's a fascinating situation. Plus, in my view, these guys are a sitting duck to be taken out. There's only 2 in the US. Well, Pfizer took out Metsera the other day, but beyond that, they can take out Structure Therapeutics or Viking. That's it. So,
And this has been talked about for a while, right? But there's the more problems you have, like a couple of months ago, the more chance, because you're now talking about a stock that you could probably buy for 50 rather than a stock you'd have to pay 70 for.
yeah.
So
I'm just reading these comments on Viking.
go for it.
Viking obviously have enough cash to fend off a takeover. Yeah, I mean, I suppose that's true, but also if they have a takeover bid, then the stock's going to end up a lot higher anyway. And the fact that they've got loads of cash, the point you've just reiterated, is great anyway, right? So they don't need to do a dilutive share issue.
just for fairness, give us the downside, give us the risk.
Well, the risk is that they, they have a liver product as well, a liver disease pipe as well, but it's much far inferior in terms of stage 1. If the downside is that this drug doesn't work, and then they'll be in trouble.
That is down 70% kind of thing.
Yep, that's the downside. But based on all the evidence we have so far, that's an unlikely event because the drug does work. It's just a simple matter of tweaking some of the components of it so that people don't have the side effects.
Okay, good stuff. What haven't we looked at?
What have we
We've
looked at?
gone through everything.
I think we've done most of it. Yeah.
Shall we take a quick look at the all sessions for you, seeing as we've gone over.
It's exactly 9 o'clock, but it's great.
And Angeline has a big interview coming up with Michael Sine. Let's just, that's Michael, of course, that told us about buybacks and how buybacks, a little bit questionable on the investment banking side.
I want qubits. I love that.
I want qubits. I think that qubits is the
want
way that your
qubits.
brain works anyway. Have you already got some of them implanted?
In some ways, yeah. In some subjects, in other subjects, I feel like I'm negative qubits. God, some of it's price action. Sorry, I'm just looking at some of these.
Right, let's just take a look at the prices for Piers. Let's see where his portfolio is trading. We're going to take a look at those now. There it is. So it's red across the board, apart from Broadcom just having its head above water. Taiwan Semi. Do you trade much?
No, never. And I suppose the reason for that being, listen, Taiwan Semi is is a blue chip, mature. But listen, all the explosive growth for this company is done, right? So I don't see, and I think there's potentially some competition coming their way in the form of Intel.
Well, I was going to ask you for an update on Intel because boy, oh boy, it's had a great move. You had a fantastic call there.
I'm out of that now, actually. I sold it on Friday, actually, in my trading book, and the reason for that being, one, I just, it's the best case scenario.
The story's done, yeah.
And there's no doubt it's Intel. There'll be plenty more noise, and that noise came yesterday in the form of TSMC. So there was a whole series of bits of news. First we had SoftBank, then we had the US government, then we had potential Apple talks, Nvidia, sorry. Then we had potential Apple, and then the final piece of the puzzle was Taiwan Semi apparently saying that they're going to join the party, investing in them. Then yesterday, Taiwan Semi came out and said we have no knowledge of this. This is nonsense.
Okay.
So that's happened about 4 times with Taiwan Semi. Personally, I would ignore Taiwan Semi. I don't think that no matter how much they might be in bed with Trump in America, I don't think a Taiwanese company, especially them, their biggest competitor on Foundry, is going to be helping them out in any way, shape, or form.
No, of course not.
Stick with the Americans. That's more likely outcome. But Taiwan Semi is a it always offers value. It always trades at a discount to what it potentially could. It's a great stock. It's at the epicenter. I just personally, I think it's not so much a growth story anymore. It's kind of maturing a little bit, and there's other things to focus on. It's a blue chip.
We've had a couple of questions on CommScope holding. Do you know that one at all?
Not really familiar with
I don't know that one.
CommScope, hang on. Oh yeah, no, I know that, but I don't have an update on that company.
Okay.
I don't think. Let me have a look.
Right, so life update. What is Piers Buckworth up to?
CommScope.
Because this time next week, when the government's shut down and the US is going into a meltdown, and you come back on next week and say, well, maybe it does matter.
Yeah, well, as I said, what I'm saying to you is that historically it doesn't matter at all. My hope is that given everything else that's going on right now, which is there's plenty of reasons to be concerned about the market, right? But it's just the only difference is the market doesn't care right now.
Yeah.
Like there's plenty of things to get your teeth into, whether it be watching the bond market back up all these rate cuts, or the Fed speak back up all these rate cuts, or the fact that we're just
the market needs something at the moment, right? It doesn't have it. We've had peak positive news flow.
Yeah, I mean,
and that's all done. The 100 billion, 600 billions, all those numbers are out.
For me, that was the catalyst for this market to stop going up.
Yeah.
When Nvidia bought OpenAI, gave OpenAI $100 billion the other day
To buy its own chips.
The market went. I mean, Nvidia went up 4.5% in a straight line. It was red before the announcement, which was a knee-jerk, emotional, algo, retail driven move, and then it reversed that move the next day.
Yeah.
And that was because the professional world, including Wall Street analysts, hallelujah, came out because normally they just chase price action. They actually came out and said, hang on a sec, guys, what's going on here? Where's this?
Numbers.
Doesn't change the numbers, and also, when's this revenue coming? Because this is getting a bit out of control now. We can go into the detail, but that was the vibe.
Yeah.
And that was the first time we've seen in ages where the professional world and Wall Street came in and said, hang on a sec, guys, what's going on here?
Yeah.
And then sold the stock and sold the AI space, Oracle included. And it was, and since that moment, the price action's been very choppy.
Yeah.
And I maybe this is the catalyst.
It feels different, doesn't it?
Yeah.
No,
it does. I mean, listen, we've seen this before, so
yeah.
My confidence levels on a sustained sell-off are like 0.
Right, 70 of you have voted on whether you think we see a shutdown or not, and it's a yes. 63% of you think that we are going into an actual shutdown at 1 minute past midnight Washington time this evening. It'll be an interesting one. It's going to be an interesting 48 hours for sure. And then, of course, we got Keir Starmer talking, the highlight of everybody's week.
Jesus Christ! I mean, I don't know. I never know what to believe and what not to believe anymore with regard to the news around that guy. But apparently, he's been busted for setting up a trust to avoid inheritance tax. Which would be the biggest, most hilarious thing ever. We probably shouldn't talk about politics because I'll get carried away. But that guy needs a language. Let's just leave that.
Right, coming up after the break, then we have. So Michael is the voice on buybacks here in the UK. Ex Goldman Sachs. If there is any questions you have around buybacks, then please ask them now, because this guy speaks to the companies, he advises companies, and speaks with the regulator as well. So, Michael, coming up next. If you think that Piers, like his brother, came on here and you want to see him back, because we're not sure whether we're going to invite him back or not. If you want to see him back, we need to see the likes. Hit that like button on the YouTube. Give us a thumbs up, and that will stroke his ego a little bit more, because he needs it. He needs a hug every now and again.
Desperately.
Piers, thank you very much.
Marcus Kane. Piers, maybe you should listen to yourself. That's the most incredible, accurate thing that could ever be said. If only I listened to myself, I would not be on this show right now. I'd be just sitting on a boat somewhere. But
what, like back in?
I seem to be struggling with it. Actually, I probably still would be on this show. It's quite fun with what we do, isn't it?
Glad to hear. We'll finish on that note. We'll see you after the break. Cheers.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hey, welcome back to the show. And we have such a strong lineup of guests. This time, this one comes from the world of buybacks. Thank you so much for being with us, Michael.
Thank you very much for having me. I'm excited.
Michael Seen is a huge equity execution guy. Also, you know, he's worked with Rich on the floors. And now you, and correct me, I'm sure I'm going to get this wrong, but you advise big companies on how to execute buybacks.
Yeah. So when a company's made a decision to or they're thinking about making a decision to return capital via a buyback, I try and help make sure that they get it executed, you know, in line with what they're expecting.
Now
There's a whole game in very, very big transactions, a lot of risk for the issuers, and so I try and make sure that they get a good outcome.
Let's talk about one that has intrigued everyone before we get to buybacks. Our friends here were very excited you're coming on. And so no pressure. He is also, by the way, coming on his birthday.
So you have to be nice to me.
28 again.
28
again. Michael is a special guest because I did ask him specifically for all you friends to look at whether or not you think we have a short squeeze happening in the markets right now, or do you sit in the camp that we're still going to have a correction sometime in October? What do you think?
I grew up in the world of momentum. Don't fight the tape. So the tape is pretty strong. I would not be trying to pick the top.
Yeah.
So
you can't ever call the top.
I think and there's so much things to be worried about in the market, and the market still seems to be strong. I wouldn't be intending to sort of fight it. Would be my world.
There we are. There you have it. AstraZeneca, moving on to that, because that has been really interesting recently, because AstraZeneca, as we know, has announced plans for a full US listing. However, it has cleverly diffused its fears of exiting the UK.
Yeah.
And it's said it will move away from ADRs for a direct listing of shares on the New York Stock Exchange, but it will continue to retain its UK listing and headquarters. So, first thoughts on this? It's good for the UK, right?
Well, insofar as they're retaining a primary listing in the UK, so they'll have dual listings. I'm not familiar particularly in any great detail with the company, but if you look at what's been happening in the UK over the course of the last 5-10 years, the number of listings we have as a net number has been declining rapidly. So I think to the end of this last year, December 2024, in the preceding 18 months, we lost 115 listings in the UK net on a total number which was around 1,100 at the start of that period, right? So more than 10%. It's pretty scary. So any more leaving just causes massive room for concern. They're not leaving, so that's got to be a good thing. Well done, London Stock Exchange. Well done, the market, for retaining them, would be my sense.
But in the longer run, I guess, as you've clearly highlighted, I mean, I wouldn't say a big decrease. I would have gone with dismal. I guess the question here is, what does the UK have to do to turn this around? The IG, as you know, are part of this big push to save the UK stock market. Why investors should look to invest in UK companies, especially if they're listed here.
Yep.
In the US, it's different, right? I mean, I was there working in the summer last year in Washington, Michigan, and also Chicago. Everyone's got skin in the game because of the way their pension is structured.
Yep.
Should that be a call for structural change here?
Yeah, and there's massive amount of work being done. There's a firm called New Financial, a chap called William Wright, who I don't know well, but has done a tremendous amount of work on not just UK, but UK and Europe, looking at how do the pension systems work globally and what can we do in the UK and Europe to improve that. And one of the critical things is get people interested, get people invested, get people's 401k or ISA or whatever jurisdiction you're in, get them so that they care. But the bit that, from my perspective, which I think is really interesting, and the difference between if you're listed in the UK versus if you're listed in the US, is how do people think about the returns that they get from their investments? And obviously you get price returns, but if we just ignore the price return for a second and assume you're making the same investment. So just imagine if Tesco's was the same as Walmart in terms of the scale of domestic penetration they have in their market and had roughly the same margins, all the growth opportunity, all those sorts of things. Are you better off owning a share in Tesco's or a share in Walmart? And then where are you going to get your returns from? You get your returns from dividends and or buybacks. That's how companies return capital to their shareholders. If you look in the US, if you're a shareholder in the US paying US taxes, if you receive a dividend, you pay a capital gains tax, circa 20%. If you're in the UK and you receive a dividend, you receive income tax. Depends on what your tax bracket is, but somewhere between 35 and 45%. Right? That's a massive difference. So UK companies are kind of going, okay, our shareholders want to see capital being returned, but it's actually more favorable to do it via a buyback from a tax perspective for the investors. And you've seen this huge trend in the US where buybacks have gone, relative to dividends. Now, total capital return, there's like 65% of notional capital return are via buybacks, and the 35% is via dividends. In the UK, we've gone the same way, but we're way later than the US. So 10 years ago, less than that, 8 years ago, the UK's, of the total capital return by the FTSE 100, about 10% was via buybacks and 90% via dividends.
Right.
This year, we're going to be 50-50 pretty much.
Interesting.
So there's been this huge shift.
Yeah.
But then you've got to worry about how do companies buy back shares in the UK versus in the US? And that's where the big problem is.
Fascinating stuff. Those of you listening in, any questions for Michael, saying please put them through. Because all this is telling me as I'm watching you speak is that, currently as the structure stands, if I were a big company thinking, should I list in London or the US, I would think, actually, I'll go to the US, bigger liquidity pool, ease of transferring, profits essentially back to shareholders. Yep. They get a bigger cut.
Yep.
Am I oversimplifying this?
Not really. I mean, people are incentivized by what's going to happen next. If you're, it depends on who you listen to, but let's imagine that companies in the UK trade at a multiple of whatever it is, 15 times earnings, and in the US they trade at 20 times earnings. If you're going to do an IPO, would you rather sell your shares at 20 times future earnings or 15? I mean, it's not a hard decision to make, right? You go for 20, right? So we need to solve that problem, which is...
We need to close that gap.
Yeah. So of course we're losing stuff to the US right now. I don't think we should... I think there's lots of things we can do which narrows that gap quickly.
Yeah, and just to illustrate this gap, take a look at the chart that I've just thrown up, FTSE lagging stock markets in the US and Europe. I'd imagine making an educated guess that this is a result or linked to what we've just been talking about. IPOs as well. I mean, in terms of IPOs, we keep seeing each, time and time again recently, many companies choosing to go across the pond to IPO. What's got to be done before we can fix this? You spend a lot of your time, Michael, advising, government.
I don't have advising, hassling them, annoying them. I don't think they sit there and they don't.
What's got to be done?
All of the focus is on two things at the moment. One is on trying to create more demand. So the pension world and this sort of stuff, talking to investors and trying to get people to invest. So there's lots of good work being done there. And then the other good work which is being done is sort of trying to make the listing process more simple, right? So the prospectus, make them easier, those sorts of things.
Less red tape.
Less. None of the work is being done, or very little of the work until very recently, is being done on the capital return side, right? Those things are capital investing side, right? The company's returning capital. If you look at the difference in magnitude, last year in the UK, I think we listed circa 8 companies. It was about £800 million of IPOs, new capital being formed. The capital return side was £130 billion or £140 billion, and roughly half of that was dividends and half of that was buybacks. We need to spend more time looking at how do we make the capital return process more efficient. And the giveaway in why this is really important is if you look at who is making all the money from the transaction process in the market right now, it's the market making community really. Like, so if you go look, it's the XTXs, the Jane Streets, the Virtus, the Citadel Securities, these sorts of guys. They do a fabulous job, but we're making it way too easy through our regulations and our policies for these guys to extract value when our investors are transacting and when our corporates are transacting on behalf of their investors. That stuff, we just need to tighten that up. If we can do that, makes our market massively competitive, will attract IPOs.
Fantastic questions from the floor as well. We've got Bigger Beer saying, wow, didn't know the tax ramifications of dividends in the UK. That is massive. It is huge. Pelican, whose real name is Mo, a momentum investor there, momentum trader, saying Revolut shareholders will force out UK listing in the future. Financial talks. Funky Gibbon asking, how did Brexit impact the status of the UK financial market, as it seems to have taken a hit since then? My goodness, B, we were just talking about this before coming in.
Yeah, I mean, I think it goes without saying, not a good thing. But the one positive of that is we're now in control of what we can do going forward. So if you look, the FCA, our UK regulator, has done a tremendous amount of work on trying to progress the competitiveness and the sort of situation within the UK independently from Europe. And we're moving much quicker. So there is tremendous potential. We've got to realize it now. That's the only good thing I can say.
I love how you're so optimistic.
Hey, we're in the markets. We have to be optimistic.
We are always
it's a full-time
optimistic.
job.
It is our full-time job. Speaking of optimistic, let's talk about General Motors versus Ford as well, because I asked you yesterday, give us something useful for our clients. How can we look at buybacks and read the signals and use that as a how can we use it in our investor edge?
Right, so really good question. And generally speaking, it's quite hard to get edge in these sorts of things. But so I was talking about General Motors as a great example. So if you go back to the start of that chart, which I think is sort of November 2023, at that time, General Motors had a market cap of about $40 billion. And they announced a share buyback executed in a very specific way through something called an ASR, Accelerated Share Repurchase Program. They announced a buyback there, which was worth $10 billion. So the really important bit from from an edge perspective is how big is the buyback announcement relative to the size of the company? This time it was 25% of market cap. So that's the first thing. Then the second thing is there any guarantee that it will get executed? And if there is a guarantee, that means that all of that $10 billion had to be spent in a defined time frame. And if you go back and have a look, they specified that it had to be complete by Q4 24. So basically the company and the brokers had about a year to complete that transaction. And then when you look at ASRs, our very peculiar version of the execution process of a buyback, they kind of set the market up for a short squeeze. And what you see in the difference between General Motors and Ford, which I don't know whether you can really compare the two companies, but you'll see about 100% price differential in absolute terms in that time period. So
I've used my measuring tool, friends, to give you a rough idea. This is a rough measurement. It's not completely, completely bottom. It's a very rough measuring tool. That is up 134%. During that time. This is for GM. Let's have a look at Ford. Those of you that have never visited the Ford Rouge factory, I highly recommend you do it. It's in Michigan, in Detroit. Having a look at Ford here, and we're going to measure the difference there. And here is the measurement tool. And let's take it from there to there. So a huge difference. That's up 25%.
Yeah. So the point is that you could, if you knew what you were looking at, I'm not saying you could predict that total outcome, but you had a pretty good idea that there would be a lot more buying pressure and demand in General Motors or Ford. So I think that stuff is really interesting.
And also, watching you talk about General Motors, this is very interesting, very useful indeed. Thank you so much for sharing this. This is quite similar, and let's just outline for our friends as well what ASR stands for. It's Accelerated
Share Repurchase.
Share repurchase.
So what that means is there's really two ways of executing share buybacks in the market, as opposed to directly from. Because all the company's trying to do is buy shares from its own shareholders, right? So if you had a company which has 100 shares and you own one of them, if the company announced a buyback, it's trying to buy back some of its shares from you and all the other shareholders. And the question is, do you want to sell or not? And if you don't sell, then the way it's beneficial to you is if you own one of 100, you own 1%. If they buy back 10 shares from other shareholders, the company now has 90 shares and you still own one. So your ownership went from 1% to 1.1%, that sort of idea. That's the big gig. The accelerated share repurchase process is when they announce the buyback, they also get given, they execute a whole bunch of that up front, or at least that's what the optics look like.
Right.
And then the game is where do those shares come from, and how do those people recover the short positions that they've basically got into with the company. That's where the trading game starts to kick in, and just understanding that is where there's some edge, I think.
Michael, is there a public list where I can find companies that are looking at accelerated share?
No, you have.
Repurchases.
Unfortunately, you have to see that in arrears. So there's a company last week, which I haven't done a lot of work on, but I think it's Marvel Technologies, and they announced a buyback program. And within the buyback program, there's $1 billion. So they announced a $5 billion buyback program, and within that, there's a $1 billion ASR. And the key there is the ASR has to be complete before the end of the year. So there's a compression of time. So the question then is, how big is 1 billion on the market cap of Marvel, and what will that mean? I think Marvel's got a market cap of around 70 or $75 billion, right? So it's not it's not like General Motors where it was 25%, but it starts to look interesting. So will there be a squeeze?
I like this. I like it when someone can give us signals of a short squeeze. Pelican asking, why do US companies announce buybacks periods 1 year plus, more than 1 year, and the CEO sells into those, I guess, those companies' highs?
I mean,
we talked about that conundrum, right? When you advise companies and you say, well, this is the inverse of the process, but it's very hard. I guess you have a very tough job explaining to those, obviously, CEOs, CFOs, all C-levels that are remunerated with shares, that actually to make those buybacks, you kind of want the shares to be low, not high, but they clearly want it high.
All shareholders always want the share price to be high. But I always try and get people to think, when I say get people, I mean the people in the company, the executives, to think about a buyback is literally just the exact inverse of a share issue. So imagine, we had this 100-share company and, you needed more money. So what you wanted to do was sell another 10 shares. So the company would become 110. The game is sell it at the highest possible price so that you get the most amount of money and you dilute your existing shareholders by the least amount, right? So that the game is obviously sell at the highest price. And obviously you receive money as a company from that process. A buyback is exactly the opposite. You have money, you've got excess capital, you want to return it to your shareholders. That process, you want to buy the shares at the lowest price. But you talk to an executive, they go, no. We always want our share price to be higher. Not when you're buying it. You want it to be low while you're buying it. You want it to be higher after you finish. You don't want to make it go higher when you're buying it, all else being equal. That process takes a little bit of, okay. And so when you're designing the transaction and the process, you've got to really understand, okay, why are you trying to do the buyback? What's the motivation behind it? And all those sorts of things. And then design the execution to suit. Lots of people in the US do try, and particularly in the US, it looks like they try and manipulate their own share price. Now, manipulation is a very strong word, so you need to have a lot of evidence for this sort of process to be accusational, which I'm not suggesting they are, but it optically looks like they're trying to do that. So then you look at, well, what's the insiders doing? So this Marvel one, if you go look, you can look at what they call the 8Ks, which are our subset of SEC disclosures. What you'll see is details about the ASR, so how many shares have they received up front? It's about 80%, so it's a lot. And then if you keep on looking at all those 8Ks, you'll find that the major management have also bought shares. So to me, that's a very interesting combination signal. They're buying shares and the CEO, the insiders, are also buying. If you look at General Motors, Mary Barra and the CEO, the chair, was long a lot of shares already, and she exited as the share price went up, and it has continued to exit. Very, very different signals to me. Does that make sense?
Yeah. So all that sounds a bit like, if I had to choose another company that had what looks like, and you might tell me it may be an ASR as well, is Vodafone.
So ASRs are a pretty uniquely American product.
Do we have something like that here?
Not really. We have similar sorts of products. In fact, if you go and look, if you were really, really tedious and boring like me and spend your time looking at regulatory filings and regulatory reports, the FCA just published in August a really fantastic, very, very detailed review of how do UK companies execute buybacks. And within that, they spend a lot of time on things, a specific set of buyback products called structured products. And the one thing that I think everybody should bear in mind with structured products, they can be fantastic things, but by and large, the people who make the money out of the structured products are the banks who sell the products. And they're very frequently associated with not such great things that happen in the market. So if you go back and look at the financial crash of 2007-8, that sort of period.
Subprime.
Yeah, if you go look at that, so there'll be things like CDOs and NBSs. They were structured products. If you go and look at some of the, so you and I were talking about 1MDB. If you go read that story, the Malaysian sovereign wealth fund, which sort of created and disappeared in that sort of 10-year phase, behind that, a whole bunch of structured products. So the people who buy structured products from the perspective of the bank, the ideal client is the client who doesn't really understand what they're doing. So it tends to be private wealth. Sorry, but yeah, that's the world. Banks will try and sell it to private wealth as these packaged investment products. Will guarantee you the return, or outcomes and all those sort of things. It tends to be the big sovereign wealthy community who are less experienced, in their sort of early phase when they're less experienced, like not the big ones that you'd know now, and it tends to be corporates. Do you know a guy called Matt Levine from your previous life, a Bloomberg journalist?
So it rings a bell.
So he writes a column called Money Stuff, and what's interesting about Matt, from my perspective, is he's an ex-banker, and within his banking world, he was the sales guy for structured products to corporates.
Interesting.
And prior to that, he was what the Americans would call a white shoe lawyer, a corporate lawyer. And when you read him, and he talks about things like Michael Saylor and strategy, microstrategy, and all what's going on in the capital markets, but to me, he always has a very interesting spin because he thinks from a legal perspective about a very usually complex financial structures from the perspective of how do they work. So I learn a lot from reading him. When he talks about buybacks, it gets really interesting.
Interesting. From just a very basic view, it used to be when someone said structured product, before they finished the product, you'd always think expensive and what's under the bonnet.
Yep.
The other thing too is coming from an Asian perspective, this is before the GFC, before the whole, Lehman, before the subprime issue, debacle. I'd go into a bank on the high street and I was gobsmacked, Michael. I was gobsmacked to look at a simple mortgage product. Picked up a leaflet and I read what it was offering. And actually I thought, you're selling this to Joe Bloggs on the street. This is actually an options structured product, underwritten by Credit Suisse. It says in very tiny writing at the bottom, and you are selling this to, Auntie Jane, Grandma, whoever, right?
Yeah, so this was my argument with the FCA with regards to these structured
all that
products.
gone now, of course. Right, after this is large, by and large, has disappeared now from the...
Okay, so go and look at the FCA's review. What they tell us about the FTSE 100 companies is that a little over 50% by value of all the share buybacks executed in the period they looked at, which was an 18-month period, a little over 50% by value are structured products. Now, what does that tell you? It tells you that these products are either sold incredibly cleverly, or the buyers don't actually know what they're buying, or a bit of both. And what my sort of frustration, the FCA did a fabulous job, but my frustration with the FCA and that process was the products aren't suitable for what the corporates need them to do. And this is shareholder money at the end of the game. What I was, sort of thought the FCA should have done is given a more severe warning to the corporates. But if you read the cover, it says nothing to see here. And what they actually did in the review, which was fantastic, was they kind of gave a caveat emptor, a buyer beware warning, saying, who are we? We're the regulator. And this is me talking. This is not what they said, but this is my interpretation, obviously. Who are we as the regulator to tell sophisticated corporates what financial products they should and shouldn't buy? But if we were looking at them, we would pay a lot of attention because there's a whole bunch of risks you might not know. And there's really weird risks. So one of the risks is, and I explained this last time when I was in talking to Richard in a really bad way, but the execution buyback against which the performance of the products is guaranteed is not a benchmark which is remotely sensible and not the right way to calculate the average price and all those. So the FCA actually they spec that out and go, they give examples of if the shares trade on these sort of things, here's what the price would be, here's the price you get, suggesting I wouldn't do that if I was you, but they don't say it. So they just give a warning. And so what the FCA have done, in my opinion, is they've shifted the responsibility to the corporate and the governance process than the investors, which is sensible on one level, but frustrating because then it means that there's a whole nother world that needs to get educated and really understand the products before they can see the potential damage they're doing. Yeah. And I have examples where normal execution, right? Your clients will know this, right? It's pretty cheap these days, right? The sort of going rate for commission for a very large investor, is somewhere between 2 and 10 basis points, right? 1/100th, a base point is 1/100th of 1%, right? So it's pretty low. I've got examples where clients being corporates, like last year paid 4%, 2 years ago paid 8.5% to buy shares. It should be pretty cheap.
Yeah. It's the equivalent of going to a restaurant saying I want a coffee, then going to a restaurant and saying I'm going to host a wedding, can I get a coffee? And you see this sudden premium being buried in. It's a good one. That builder's intake of breath, right? We got questions from the floor. Neil, who's away from the numbers. Hello, Neil. As a long-term Vodafone shareholder, I'm struggling to see the benefit of share buybacks. What's the purpose of holding these shares in Treasury?
It's a really good question. So the advantage to Vodafone, if they hold shares, is if the share price goes up a lot, they can just sell them without having to issue. So the shareholders won't get diluted if they sell. But more often than not, what you'll find is they'll hold them in Treasury for a period of time, and then they'll cancel them. And there's regulation in the UK as to how long you can hold them and those sorts of things. So it depends on what they're going to do. More often than not, when there's large buybacks, which are structural, is one of the structural ways in which the company is trying to return capital to shareholders instead of or alongside dividends. Normally what you'll see is they cancel them, or rather cheekily, they may provide them to their internal management as a compensation.
Hello!
So that's why
a few more to you.
You need to pay attention to the net number of shares out there, right? Or how much are they issuing to internal management? Or if they don't need to issue to internal management, if they've already bought them in Treasury, they just reallocate them.
Right, we're running out of time with Birthday Boy here. Pelican Mo has got one more question. Can you touch on US company buyback windows? It will close soon on earnings.
This is a huge, big misunderstanding in the market. If you look at how companies execute buybacks, typically they'll contract with a broker. And the purpose of the contracting with a broker is so that the broker can execute the buyback throughout the open and closed windows. Now, it's hard to see this, but ASRs, for example, are a classic example of this, right? It doesn't matter whether the company's in an open or closed period. Once they enter the contract, what the company does is they basically outsource the trading decisions to the broker, so they can trade all the way through. So if you actually look at, rather than the windows, if you look at the behavior of brokers who execute buybacks on behalf of other people, you'll see that the peak purchasing is actually when the share prices go down, rather than where we are in the reporting window. So actually, it's really badly understood by the market. But I would tend to not pay that much attention to that. We're going into the window. I don't think it makes a ton of difference.
So those of us not in the market, what is the earliest sign? Where can you find the earliest signal that a company's about to announce a share buyback?
Yeah, I mean,
what's the hack, Michael?
Yeah, I don't have the hack. What you need to figure out is are they cash flow? Again, I'm an
Are they
execution
cash
guy.
rich?
Yeah, I'm an execution guy, so totally ignore me what I say here. But are they cash flow positive? Have they got a decent, strong balance sheet? And then, what are they doing? Are they investing in growing, their R&D and in growing products and all those sorts of things? Or are they signaling that they're going to return capital? If they're signaling they're going to return capital, they've got two choices: either increase dividends. Management typically hates doing that because when they increase dividends, it's very hard to reduce a dividend. They prefer a buyback because it's perceived to give them more flexibility. So, they might commit, £100 million to a buyback. Next year, they're not really obligated to do the same thing. Whereas if they commit £100 million to a dividend, they're kind of obligated at a minimum to do the same thing, right? So management prefer, and investment banks prefer advising management to do more buybacks and dividends. Why? Because investment banks make a fee.
Ka-ching!
Precisely, right? So the incentive for the bank is, hey, most investment banks hate companies doing buybacks. Why? Because they'd much rather the company took that money and bought another company, right? M&A, because it's got a higher margin.
Nice fees.
But if they're going to do a buyback, they would rather it was a structured buyback rather than an agency buyback, because the potential to execute it and have a higher margin is much higher in a structured product than it is in a regular vanilla agency transaction, right? So that's why I think you see behind the scenes, the people are just responding to their incentive. They'll sell the product with the highest margin. Like, no surprise.
Fabulous.
They're just humans.
Yeah. Thank you very much.
Well, thank you very much, guys. Hope this was useful.
Very insightful. Thank you so much from everyone on the floor as well, from Neil, from Mo. Neil saying, thanks, Michael, as I suspected, hand in hand with harmonic averaging.
That was what I bored these guys with laughing when I came in.
Don't fail. There's one.
That was funny. I had a whiteboard out going, because I'd asked Rich just before, can I use a whiteboard?
I remember the whiteboard, yes.
Yeah, that was pretty awkward because I hadn't even tested it.
Yeah, the ink was a bit...
It didn't matter. It was fun. Hopefully somebody remembers it, so I'm going to take that as
I was thinking...
I'm going to take that as a positive.
Right, thank you so much. Do join us again tomorrow. Otherwise, we'll see you on Discord. But if you like that, hit the like and subscribe button. And you've got more questions, put them to me or Michael or Rich on ask@ig.com.